Come on guys, let me show you something. Have you ever seen these spikes before happening on the chart? That price can move from 100 to 150 pips in 15 minutes. It's been caused by high impact news such as this. In this video, I'm going to be explaining what fundamental analysis is and comparing it with what technical analysis is, which is what you guys are already used to me talking about here on this channel. Now let's talk about fundamental analysis. In Forex trading, we have two major types of Forex analysis. We have fundamental analysis and technical analysis. And in this video, I'm going to be delving deep in what fundamental analysis truly is. But however, arguably, people will say there are three types, which include sentimental analysis. I, for one, don't think sentimental analysis should be left alone as a standalone type of analysis because it's always either dependent on technical or fundamentals. That's going to be a topic for another day. Let's delve deep into what fundamental is in this video. Fundamental analysis is the analysis of economic, social, political factors that affect a particular country's currency, and that could be directly or indirectly. And in so many ways, this has come to play even in time like this. Like we had a time when Donald Trump was about to be voted out from the presidential elections, and then Joe Biden came. During the trade war between China and United States, we also saw what happened. And during the war between Russia versus Ukraine, we also saw war also happen. These are examples of fundamental analysis. As regards fundamental analysis, there are key components that we always do look out for. Some are more respected than some other ones. Example, interest rates, GDPs, inflation, employment data, geopolitical events, and central bank policy that influence Forex market directly. The most popular one amongst Forex traders is non-farm payroll. What that simply means is first Friday of every month when in the United States you get to release data of unemployed people in the United States. That can have direct or indirect effects on the US dollar, and most traders do care about this day. The major strength of fundamental analysis is that it focuses on long-term trend. Its ability to provide a broader market view and its relevance in determining the intrinsic value of a currency. That's why I do love fundamental analysis. Technical analysis is emphasizing its focus on price charts, patterns, indicators, and historical market data. They believe that anytime that a future price is about to happen, that history, a chart to the left-hand side, has got a lot of things to tell as to what the long-term trend would likely be like. Technical analysts always believe that history has got a lot to tell how the market will likely move in a couple of minutes or in next days. And that's why I love technical analysis. Technical analysis have key components, some of which are support and resistance, trend lines, relative strength index, MACD, moving averages, and so many other popular indicators that traders do use all over the globe. The major strength of technical analysis for me is the ability to identify smaller trends or short-term trends. You can scalp on 15 minutes, scalp on 5 minutes, 1 minute, on 1 hour. You can just do day trading too. That's why I love technical analysis. Now that we understand that technical analysis has to do with predicting price movement, looking at historical chart movement, I also do understand that fundamental analysis requires you predicting the next move, looking at social and macroeconomic news of a particular country's currency. Now, let's do a bit of comparison and contrast between this type of analysis. Fundamental analysis deal with long term. It gets to tell you the long-term trend of a particular currency. For example, if US election favors the currency USD, then that means it's going to be bullish on USD, that is going to be a buy, or it's going to be more of uptrending. What you're supposed to do at that particular time, then you're supposed to be longing or buying USD pairs. So what that would mean is, in a layman language, is you go on USD JPY and you click on buy. You go on GBP USD, you click on sell. All right, you know why it says sell? If you know why, comment in the comment section below. In order for me to properly discuss this, I need to take you through the advantages and disadvantages of each particular analysis. First, fundamental advantages. There's impactful movement. Anytime that a news release happens, you see a sharp move in price to the upside or a sharp decline in price. There's nothing like having to wait for a couple of hours or a couple of minutes. Everything is just fast. That's one thing I love about fundamental analysis. The third point is applicability amongst various markets. Technical analysis can be applied to almost all the type of market. Like you can apply it in stocks, you can apply it in Forex, like currencies that we do trade, you can apply it in commodities, everywhere, all across pairs. It's not one type of analysis that you have to start adapting to other type of market conditions. All you just have to do is to make sure you study the economic, social, political news and everything of that particular currency or that economy, then you are good. Fundamental analysis allow you to understand market driver beyond what technical analysis is going to show you. It tells you the underlying trends and people that are actually driving the currency. For example, in times of trade war, China trade war as against the US, We saw what really did happen in the financial markets. We know what was driving the market beyond the technical analysis, beyond the charts, beyond the indicators, and then the fundamentals were just really dominating at those particular time. The fifth point is valuation metrics. Fundamentals allow you to understand whether a particular currency is undervalued or overvalued, and that you might not be able to tell with technical analysis. Disadvantages of fundamental analysis. Disadvantages are quite a lot, but one that did really stood out for me is over information. You can get a different information from forexfactory.com while investing.com is telling you something similar or something different, while my Forex book, my FX book is telling you something really, really different. There are too many information. You really have to know what happened previous, you have to know the forecast, and then you have to wait for the actual to be released. You have to make sure you're on time. There's just a lot of information to deal with. You have to know what happened in the previous one. You have to know what happened in the previous 2-1. It's just a lot of information with fundamentals. The second disadvantage is market expectation versus reality. This is almost like saying what I ordered versus what I got. Sometimes USD might be weak at your Forex factory, or maybe on your investing.com, it might be red, and then you go on your chart, then it first goes down immediately, take out your stop loss, and then trade to the upside, or first hunting to the upside, taking out your stop, and then coming to the downside. That can really happen. There's a popular video on YouTube where a Forex trader from South Africa was trying to scalp news. Yeah, I gave the news, I gave the trade, and then he ended up in loss. That will happen. He predicted a buy, price went up, and then boom, to the downside. That keeps happening almost every time. The third point is dependency on accurate data. In order for you to get access to this pure data, you really have to pay loads and thousands of money to get accurate data. Now, it's not this data you just get on forexfactory or investing.com. There's a premium channel that you could actually subscribe to be among the people that will get the first-hand information of what the actual really is. That might sound kind of manipulative, yeah, but then that's what really happens. But then it is really hard. You have to be dependent on the actual data in order for you to flourish in this space. The fourth point is complexity and subjectivity. It's subject to so many reasons. You can't just see that the US news is released and it's just subject on maybe on one thing. No, there's a lot of things. There are many other factors. It could be social, economic, inside out social economic. There are so many other macroeconomic news, microeconomic news that you really have to deal with. So that has got a lot of eyebrows raising, because 2 plus 2 is not equal to 4 with fundamentals. 2 plus 2 could be 22. That's just a simple explanation as to how subjective it can be. A news that affects USD also affects China. The effect will definitely be different because it's subject on the geopolitical zone, existing economy, and it can also be subject on the current presidency, subject on the House of Commons, House of Lords, the people that are presiding over the legislative, whether it is the Democrats or the Republican that is ruling at that particular time. So it's very subjective. You can't say because this type of news was a bullish effect the other time that is also going to be a bullish this time around. You can't just predict. So these are the advantages of fundamental analysis. Advantages of technical analysis are a lot. Not just because I'm a technical analyst, it's just a lot. Number one is clear entry and exit. With technical analysis, you can accurately say this is my entry point and this is my exit point. If XYZ happens, I'm going to be getting in. If XYZ also happens, I'm also going to be exiting. For example, I do use psychological level, handle of the week, and accurate chart pattern like M and Ws. Anytime I see 3 of these confluences in a certain zone, I get to go long or go short. That's a clear entry, and that's something that I can teach a 3-year-old or someone that is coming up, and then the person will be able to also replicate. Second point is availability of tools. There are various tools as regarding technical analysis, like indicators. There's RSIs, there are bots, there are EAs that could be used to make better decisions, that could also help you in trade management, that could help you in risk management, and etc. There are a lot of tools that could help you, and these tools are readily available even on your MT4, MT5. They're also pre-installed on your trading view and every of your charting platform. There are all these tools available, ready, looking at you in your eyes. Use me right now to make the next profit. Also, moving averages, they are not left out. Third point is technical analysis can also be automated. There are some set of rules that you could actually just code, call a programmer, code it, and put it in a bot. And then you could give that to someone who might not really be 100% be interested in trading, and the person could also be making some profit. Although I don't really 100% believe in bot trading, but then it's a system that could be automated. One reason why I don't believe in bot trading is not that it doesn't completely work. It does work, but the one time that it might fail you, like a bot can be 99% right, but that 1% chance that it might not be right can actually do mess you up. If the bot might not be sensitive to the current market, happenings. So that's why I don't 100% believe in bot, or that's why I don't use bot. I still prefer the manual trading. But however, this is a very good point. It can be automated. The fourth point is technical analysis allows for quick analysis. If you already know how to do technical analysis just by merely looking at the chart, checking the trends, checking the level where it's at, you can already determine maybe a short-term movement on the chart, and then be able to make some couple of pips, say about 30, 50 pips, and then you're able to walk away with. For those who don't know what 30, 50 pips mean is, if you're using one standard loss, and 30 pips simply means $300 and 50 pips means $500. The fifth point, as regarding the advantages of technical analysis, it supports proper risk management. Technical analysis, you would always see your stop loss staring at your face. You always want to get in maybe during London, New York sessions, and then there's always stop loss. Unlike fundamental, there's always a spike at each point in time. There's always a spike, but technicals make sure that it supports proper risk management. It doesn't move too radical. There's always a point that provides for stop loss. You always notice that technical analysis talks a lot about stop loss, stop loss, stop loss. Disadvantages of technical analysis. One of the most disadvantages that is outstanding to me is that subjectivity in interpretation. Again, too, with technical analysis, you can see a trade and then you do analysis, it will show an end pattern to go short. Then another person in the group chat is saying that you should go long. I mean, that is crazy. It happens from different time frames, different interpretation everybody can give to it. And sometimes a pattern that is showing head and shoulder, which means should be short, right? Sometimes head and shoulder can turn to a long market. So it's very, very subjective. There's no particular one-way strategy. It's not like a textbook layout all the time. It is very difficult for you to find a textbook layout regarding technical analysis. This is what I really have to deal with a long time, lagging indicators. When I was using indicators, there are some indicators that would tell you a buy, meanwhile it's already reversing for a sell, or it's even falling price. It doesn't tell you what is likely to happen next. Example of that indicators can be moving averages and also sometimes stochastic. These indicators, stochastic is supposed to be a lead indicator, but then sometimes it is lagging. It doesn't tell you the truth. And then I got to find out that the best way to actually deal with this is to learn proper price action, which is what I later did. But if you're using indicator, this is just one downside of technical analysis. It's always lagging. The third point is noise in short term. Have you ever checked out the 1 minute chart? You see that a lot of noise that you see, candles printing here and there, being on a bullish side, on a bearish side. It is so noisy. That can never happen with fundamental analysis. So that's one of the disadvantages I have with technical analysis. There's a lot of too much price fluctuation, most especially on a short time frame. The next point is false signal. There are too many false signals with technical analysis. There are times that your so-called strategy will tell you to buy, meanwhile it will do some sluggish movement on a buy, and then we see a flash move on a sell. So these are some of the disadvantages. Talking about this, I remember there was one indicator that used to tell me that there's an overbought or an oversold. But with time, you get to find out that a market that is overbought might not 100% be overbought. A market that is overbought will keep buying for weeks. That also happens, and vice versa for the sell. So that's why it's important as a price action trader, you really need to start focusing a lot more on risk management. Even when you know that your strategy has got an edge, you still have to measure with a proper risk management. The last point is over-reliance on historical data. You don't want to be looking at historical data as to how the market moves all the time, or you think that everything has to be dependent on historical movements to determine what will likely happen in the future time. I mean, there's still a place for fundamental also participating in the Forex market. There's still a place for sentimental. But technical traders believe that everything on the chart has to do with historical price movement. For them to know what will likely happen next, they have to look to the left. They have to check the chart. They have to check what the indicator has said, or what the indicator is currently saying, what the price has done at that particular level or the time. That's over-reliance on price movement. And trust me, it's beyond price. Market has a lot of factors that controls it. There's a lot of things like monetary, interest rates, price movements, like GDP. We have a lot of factors that could also determine as to how or why markets will move. Conclusively, I just want you guys to have a clear insight as to how technical analysis work and as to how fundamental analysis do work. Two of them are fantastic way of analyzing, but one thing I would want you to take away is using them interdependently. So because if you're a pure technical trader, be a pure technical trader. If you're a fundamental trader, be a pure fundamental trader. Because in trading, there's what we call over-analysis. Over-analysis brings paralysis. That's how I love to say it. Whenever you over-analyze as a technical trader, you get to start making making blunders, because sometimes sell market looks like buy and vice versa. And if you're a fundamental trader, whatever you overread news, events, economic, and you listen to what macroeconomists are saying, or what people who are predicting the market forecast are saying too much, you watch too much CNBC, you'll be confused as to whether US is going to be strengthened, US economy is going to be strengthened, or whether Great Britain is going to be weak or something like that. So what I just want you guys to know is focus and trade what you see. Look at a particular channel. If you're a fundamental trader, I'll recommend Forex Factory or investing.com. Any of these two is a reliable source for you to get next news events so that you can properly trade it. Only focus on high impact news. For a technical trader, only look out for price action trading. All right, but then if you also trade using indicator, it's also fine. I've done tons of video here talking about indicators that you could consider looking into, like relative strength index. I'll recommend that you check that out. I just dropped that video. That video, I explained how you can have a tactical entry and exit from the forex market. That's a technical approach. So with all of these systems that we have put in place, you must just have to choose one that best suits your personality. Trust me, you can't be everyone. You can't be everywhere. But then there's another niche of sitting in the fence. You can be small of a fundamental trader and be small of technical trader, and then you merge that together. I've seen some successful people that also do that. Once it is time for fundamental, maybe like CPI news, they get to trade that too on a smaller term, but using proper risk management. And once it's time for technicals, days that news are not being released, they also get to trade the technical side of things using the historical past data. These are the things I want you to put into perspective before choosing which one you want to fully become. But for me, I'm a pure technical trader. Like this video so that this video can be recommended to as many people that will be interested in learning what Forex trader is. I'm Jeffrey Benson. I'm going to see you in the next video.